Senator Bragg.
Just quickly, so the 5% deposit scheme.
Yes, Senator.
So these are riskier loans, aren't they?
Well, let me make a general statement that doesn't go to the home guarantee scheme specifically, Senator, but as a general comment, the higher the loan to valuation ratio, the higher the probability of default. That's the principle that we operate on, and that's the principle that we apply our prudential regulation on.
So 95% LVR loans. Most people would say those are pretty risky, wouldn't they?
Well, as I said, Senator, the higher the leverage, the riskier the loan.
So you've said you're concerned with the pickup in higher risk mortgage lending overall. Now you're talking about owner-occupied and investment loans.
What we've said, Senator, that I think we talked about last time we came was that
Talked about many issues, Mr Lonsdale.
Sorry?
We talked about many issues, Mr Lonsdale.
Yes, we did. But on risk as it related to lending, the conversation concentrated not on high LVR loans, but on what we were doing on high debt-to-income loans.
Debt-to-income, yeah.
Which is more of an issue for investors than it is on first home buyers. And it was the growth that we were seeing for high debt-to-income lending that caused us some concern that led to the imposition of the guardrails.
So high debt-to-income lending is a concern, owner-occupied and investment loans, both?
Senator Bragg, thank you. Therese McCarthy-Hockey. I think you're asking a really good question, and that is how do we think about the risk? And we are saying that in general, you would say a high LVR is higher risk.
Yeah.
Therefore, what we think about is the measures of resilience that support that risk. And what we are doing, and we're doing three things. The first is that we require the banks to have internal risk appetite set against the actual ALVR, not adjusted for the scheme or any scheme. It's relevant. We are also requiring the capital allocation to be, again, based on the base level of the LVR, and that's for the, it's called the IRB, or the internal rating-based banks. Now, that's basically, or largely, the major banks, and that's most of the system. For most of the system, therefore, they have capital allocated at an unadjusted basis, you would, if I put that simply. And then the last thing is that we require them to, all banks, to continue good serviceability assessments and other lending. So it's fair to say that the shape of lending changes over time, through time. What we look at is what are the resilience measures that go against that, and that's why we've got those three things we're doing, that we say, well, in the main, with those lending occurring, this is a conservative setting.
This is your new macro-prudential tools.
So the macro-prudential tools is a different thing. This is talking about the actual capital on each loan,
right?
And the
but that's what you do for prudential purposes anyway, right?
That's right.
But I thought the debt-to-income ratio that you flagged a while ago, only a few months ago, Mr Lonsdale, was in relation to deploying a new macro-prudential tool. Is that right, or have I got that wrong?
So it is a new prudential tool, macro-prudential tool for us, for Australia. Other countries have used the tool. Yes, Senator.
So it's a debt-to-income speed limit on the institution, or so on their whole book?
On the flow of loans being written.
So, but that's for investor loans and for owner-occupied?
Correct. There are separate buckets.
Okay, and so they've got their own speed limits?
Well, it's the same speed limit, but
you look at them in
but the buckets are applied separately.
Okay, so are you more worried about investor loans or more worried about owner-occupied?
Investor loans, Senator.
Finally, then, are you collecting any data in relation to people who are using the 5% deposit scheme?
We are
I mean, obviously you collect information from the banks about the riskiness of their book. These are risky loans by definition under your own measurements. Do you?
That wasn't the evidence that they presented.
So
95% loans pretty risky.
So
Well, you assert that.
It's a fact.
They've been quite... Well, that's your...
Do you want to know what a high LVR is?
That's your propaganda.
Be anything over 80%.
I know you don't like the scheme, but the officials have been quite
I don't mind the
careful.
scheme. I just wouldn't give it to
The officials
millionaires
have
and
been,
billionaires.
the
I wouldn't give
officials
it to
have
rich
been
people.
quite careful to answer your questions on the basis of their evidence and their frameworks. Don't verbal them. Ask them a question that they can answer.
Thank you very much. So the question is, will you collect more information about people who are in the 5% deposit scheme?
Senator, I'd like to come back to you with, because it's a very specific question on the scheme itself. What I can say generally is that we do have information on first home buyers, which is a broader set, and the December point that we have, which is new information that we didn't have the last time we were here, is that first home buyers' share of new commitments, which isn't a loan yet, it's a commitment from the bank, has increased from 16.8 to 17.8 in the December quarter. But that's a broader aggregate. That's for first home buyers. But we will come back on the scheme itself.
Yep, thanks. Thanks, Chair.
Senator.